This is how to trade options on Webull the right way. So many beginners jump into trades without knowing how to exit them correctly, trapping themselves and accelerating their losses or losing out on profit. We're walking through buying and closing step by step so you can trade options on Webull with complete confidence, and it all starts by setting up the right foundation. Okay, so the first thing you need to do on Webull is head to the menu tab on the far right. Click settings and go to account management. Here you'll see a section for options trading level. You'll need approval to trade options, but before that, Webull will give you a cash bonus or free stock for opening an account and depositing. These are steps you need to take anyway, so don't miss out on free value if you haven't opened an account yet. The link in the comments below will show you the current offer and a way to sign up. Okay, so when applying for options, the sweet spot is level 2 because this gives you full access to buy and sell options, plus access other strategies you can use to grow your account. Now, you can be denied for options, so when applying, make sure you answer honestly, but you must show that you're okay with some level of risk, otherwise you just might get denied outright. Okay, so we have the foundation set, but we need to make sure you don't get trapped at any point during the trade process, so let's jump into correctly entering and exiting a trade. To trade, go back to the main dashboard, then click on any tab at the bottom with the search bar to pull up the stock you want to trade options on. Using Tesla for this example, once you get to the chart, click options, and this is exactly where you want to be. Now, this might look overwhelming right now, and that's completely okay. Let's make this screen as easy as possible to trade from, and I'll show you what to focus on when getting started. The first thing you want to do is click the drop down in the bottom right that says both, and then you can filter the chain by calls or puts only. This makes it a lot easier to focus by removing everything that isn't relevant to exactly what you're trading in the moment. We're going to trade an example call option step by step, so we'll filter this screen by calls only. Now, when buying a call, you're betting that a stock will go up in price by a certain date, and if you're correct, you profit. Now, buying a put is the reverse. You're instead betting that a stock will decline in price by a certain date, and if you're right, again, you profit. Understanding how to buy and close a call will set you up for success, so let's walk through that step by step, and we'll cover puts in another video. Okay, so each price you see on the left is called a strike price. These are the prices you can bet that the share price will be above by the expiration date. You can also choose from a bunch of different expiration dates by clicking and sorting through these other drop downs. Tesla is currently trading at about $426 per share. Let's make a prediction that by October 17th, 2025, it'll be trading above $460 per share. Now, to be able to profit from this prediction, we have to pay to have that right. So even though we predict Tesla will be at or above $460 by the expiration, we don't want to choose that price on the left. We need to factor in what we have to pay to buy the option, and thankfully there's a way to see what the stock must be trading at for us to be profitable after factoring that in. If you scroll over, you'll see this column that says break even. Since we believe Tesla will be trading at $460 by October 17th, we need to buy the strike price that has a break even of less than $460 for our prediction to be profitable when the option expires. So it looks like the $435 strike is the first option with the break even price below $460. So let's buy it. Click on that option, then you're brought to the order form. We'll leave the order type as a limit. This protects us from paying more for the option than we want to. Next is limit price. This is what you have to pay to buy this option. It works differently when selling, and you'll see why this is so important in a second. Now, $23.90 seems cheap to buy this option, but we actually need to multiply this number by 100 to get the actual cost, because each option contract represents 100 shares. In the next box, enter the number of contracts you want to buy. At the bottom, you'll see the order cost in the form of a debit. This means the money is leaving our account, and this is the total we're paying to buy this option. You'll then see a transaction fee. Webull itself doesn't charge fees for stock and option trades. This is a regulatory fee everyone has to pay, no matter the platform. You'll then see your available buying power, aka the amount of money you have to buy this option. This is just an example, and I don't have enough cash in this account to buy, but when you're going through the real order process, you need to make sure this amount is at least the same amount as the estimated order total shown. Then hit buy, double check the order details, and hit confirm to place your order. When the order fills, you're officially in the trade, but don't get trapped. here's how to exit the trade correctly anytime leading up to expiration to profit or minimize losses before they accelerate. So let's say we own the option we just did an example with, and the next day Tesla's share price shoots up and the call becomes profitable. Instead of waiting until October 17th, we can exit this trade right now to secure that profit. Make sure you follow these steps closely because they're key to exiting the trade properly. What you want to do is head back to the options chain, go to the same expiration date of the option you bought, so October 17th in this case, then choose the exact strike price you bought. On the order form, click sell, and for the limit price, instead of this being the amount you pay, this is the amount you'll receive. Then make sure the number of contracts you're selling is the same number you bought. At the bottom, the estimated total will be in the form of a credit, meaning the money is coming into our account. And the difference between this credit and the debit you paid to buy the option is your profit or loss. Now, you don't need to worry about your available buying power here since we're receiving this estimated total, not paying it. Hit sell, double check the order details, and as soon as your order goes through, you've successfully exited the trade and there's nothing else you need to do. For the Webull features you can use to accelerate your path to success, you'll want to watch this Webull app tutorial for complete beginners video.